Baba Kalyani, Chairman and Managing Director of India's biggest and largest and oldest forging company, joins us now. Mr. Kalyani, morning, always a delight to connect with you. Let me first start with something which is a very industry-specific problem. The investment climate in India is very low because of policy paralysis. What is your personal assessment of how soon the investment stroke capex cycle could pick up?
I think if you look at the macro level, right now the space for private investment is rather crowded. So, there is hardly any space at the macro level for private investments with all the large deficits that we are running and everything else that's going on. So I think there needs to be some easing on the macro level on our overall economic situation before private investment starts coming in a much bigger way.
Mr. Kalyani, good morning. Your expectations and what we can see on the reform front. As an industry watcher, do you see the government taking any important ones in the next coming few months?
My personal feeling is that a large part of these reforms are going to be driven by what people want, which is, another way of saying that, the market forces will drive a lot of decisions to happen. So clearly you will see things happening now. The real question is, do they happen fast enough or do they happen in a slow manner? If they happen fast enough, we will see much larger growth rates in the economy. If they happen a little slowly, we will see moderate growth rates in the economy. But clearly, the Indian economy is driven by market forces to a large extent, and I think it will continue to go that way.
Right. So, Mr. Kalyani, what has been your interaction with some of your peers in the industry, especially in the automotive manufacturing space?
Well, if you look at the automotive industry, and if you take, most people in the automotive industry take a longer-term view. So the view overall in the industry is that by 2020, which is another 8 years from now, industry will almost be 2.5 to 3 times of what it is today. So most people are looking at, how do you expand capacities? How do you, bring in the kind of products that the market will need at that point in time? Because, in any manufacturing business, the investment cycle is 2 to 3 years by the time you, start the investment process to the time that it gets fructified. So, long-term view is still pretty optimistic.
So, Mr. Kalyani, as a company, Bharat Forge in the past has been in a growth trajectory of above 30%. Where do you see it headed from here on the current base that you are working with?
I think we will, if you look at our company, we have a focus on the internal market, we have a focus on external markets. We are in different segments of the market. Automotive, we are in the industrial segment of the market, which is non-automotive. In automotive, we are in commercial vehicles, passenger cars. So we have a fairly broad spectrum in terms of markets. And each of these markets will grow differently in different geographies. But the good news is that, being in such a broad range of customers or markets, we see even if one part of the market is going down, something else is going up. So overall, it keeps generating growth for us. And especially in the non-automotive space, which we have started in the last few years, we see tremendous opportunities, and we have seen some good growth in the last few years. So overall, we are very optimistic about our growth.
Right. Mr. Kalyani, even though Bharat Forge is a global company, a chunk of your revenue still comes from India, about 60% of your revenue and 90% EBITDA. So what is your outlook for your India business for next 2 or 3 quarters?
Our Indian operations cater roughly 50% to domestic business and 50% to global business. So that means we export almost 50% of our products out of here. So our outlook is fairly positive. We see growth. Right now there is some amount of stagnation. But as I said, second half of this fiscal, I think the domestic markets as far as automotive will also start seeing some growth. And globally, North America is strong today, so we have a fairly large exposure to North America. We see growth happening there. So overall, we are quite optimistic.
Mr. Kalyani, what's the outlook on North America and the European side of your businesses for FY13? And do you see any improvement in the operations as the economies there are still playing out?
I think, North America has come out of the severe recession that it had during the financial crisis. So there we are seeing growth, reasonable growth. Europe is a little subdued because of all the problems happening in Europe. But our exposure in Europe is largely to Northern Europe and Scandinavia, which still continue to perform reasonably well. So we are not that impacted. In India, we will see growth happening. Right now we are in a kind of subdued phase because of the cyclicity of this business. So second half onwards, we should see some growth happening. But longer term, I think, as I've said, automotive industry in India is going to, go 2.5, 3 times in the next 8 to 10 years. So one should be fairly optimistic about this sector.